Welcome back everyone to another Binance tutorial. In this video, I want to make an introduction to Binance loans. How do they work? How much do they cost? And in which situations is it worth your time? Let's find out. So once you log in, you will go to Finance and you will find here crypto loans. So the whole idea for crypto loans on Binance is that, for example, if you have Bitcoin and suddenly you find another coin that you want to buy, but at the same time you don't want to sell that Bitcoin and you just wish you had a little bit more money so that you can buy this opportunity that you find right now. It can be for short term or medium term, from 7 days all the way to 180 days. I will even change here to BTC. So our collateral will be in Bitcoin and we want to borrow in BUSD. Here you can already see the hourly and daily interest rates, so 0.04% per day. And let's say here, let's put $100 BUSD so that we see how much is the interest. And I'm gonna leave it for 30 days in our example. So here we see that we would pay 1.2% per month on BUSD if we have Bitcoin as collateral. So the total interest paid would be the 100 BUSD that you just borrowed plus the interest rate, which is 1.2 in our example. So the total amount would be 101.2 BUSD to repay by the end of these 30 days. Also, the interest rates can vary depending on which crypto. For example, if you're borrowing BUSD, it is 0.04% per day. But if you're borrowing Tether, then it's already 50% higher at 0.06%. And if you click here, you can see all the different cryptos that are accepted as collateral. So you have all these options, and to borrow, you have even more options. But the interest rate is not that high. So depending on your specific situation, it might be worthwhile to do something like this, as long as you plan and you read first and you understand exactly how it works. When it comes to the loan term, you can see here that you can repay in advance if you wish. So you did a trade, and let's say you borrowed for 7 days, and after 1 day you already made your profit and you're happy about it, you just want to close your loan, you can do so without any extra cost. So to set up this loan, you just need to have your collateral on your spot account. And when you borrow and you click this button here, you will receive those BUSD on your spot account as well. And this BUSD that you will borrow, you can use to do whatever you want. You can trade, you can even withdraw. So depending on your strategy, it might be interesting to do something like this. But you need to know exactly how it works. If Bitcoin falls like 20 something percent, like 22 or 23%, you will already be liquidated. So we're gonna talk about the LTV, which is the loan to value ratio. If you have any questions, you can just mouse over here. But the important thing to know is that your ratio, the amount that you're borrowing and the amount of your collateral, so your collateral will be always a little bit higher than the amount you're borrowing. And initially it will be 65%. Once it gets to 75%, you will have a margin call. And on 83%, you will already be liquidated with a 2% liquidation fee. And you want to avoid that as much as possible. So how can we reduce this initial loan to value ratio? Let's say you start borrowing and you want to increase the collateral so that you won't get liquidated. If you want to see your loan and repay, you can go to orders and go to loan history. And here you will see the options to repay and to adjust the loan to value ratio that we just discussed. If you want to repay, you can just click maximum or the 100% and then confirm the payment. You will have all the data here according to your own loan. If you want to adjust the LTV, it will start here at 65% and it will change according to the price of your collateral. And you can add collateral here so that your LTV will be lower and therefore safer and further away from liquidation so that you don't have any bad surprises. So don't try to take as much BUSD as you can, because you want to have this comfortable margin that you don't have to worry about the liquidation price. We all know that Bitcoin is very volatile and crypto in general is very volatile. So a 20% move, it can happen in a single day. And you could ask, well, but if I have to put the collateral, in our example, I could just sell the Bitcoin and then buy this other crypto that I want. Yes, you could do that, but the advantage of the Binance loans is that you would keep your Bitcoin. So if Bitcoin is increasing in price, you will still have the best of both worlds. So you have the Bitcoin increasing, and also you have this opportunity that you can buy at a good price. Of course, there is risk depending on your particular situation. It might make sense to just sell the Bitcoin like we mentioned, but it really depends on a case-to-case basis. For example, if you know that next month you will receive your salary, in that case, it would make sense to have a 30-day loan term, because you will know that you will have your salary to repay in case something goes wrong with your trade. Now, if you don't have any extra money, then I would probably not take this loan. So it depends on your specific situation. And before you take this loan, it's important for you to read all this FAQ. It's very helpful. And I will send a link also to this tutorial, which is made from Binance actually. So they have their own tutorial video. It's very interesting. It explains everything, how it works. So make sure you check this out. It will be in the description as well. So this was my short introduction to crypto loans on Binance. By the way, if you still don't have a Binance account, you can use the link in the description to get a 10% off your Binance trading fees for life, plus a $100 sign-up bonus that you can use to repay trading fees on Binance. So make sure to use that, and I will see you in the next Binance tutorial. Thank you for watching.